Donald Trump's return to the White House is just around the corner, and it has everyone asking the same question: how will this affect my money? Whether you're invested in stocks, dabbling in crypto, or just keeping an eye on the economy, this video will break down what Trump's inauguration could mean for your finances. Stick around to the end, because we'll also share some strategies to help you prepare. Stocks. Donald Trump's return to the White House has everyone talking, especially investors. If you're wondering how his inauguration might shake up your finances, let's dive right in, starting with the stock market. Now, let's rewind a bit. During Trump's first term from 2017 to 2021, the stock market had a pretty solid run. The S&P 500 climbed steadily thanks to policies like tax cuts and deregulation, which gave a nice boost to industries like energy, finance, and tech. Fast forward to now, and since the November 5th election, the S&P 500 has already gained 5.3%. Pretty exciting, right? But here's the thing. Most of this excitement is based on what investors think might happen, not on actual policy changes just yet. The reality? Big changes take time. Companies are holding off on major investments until they see clearer direction from the administration. Cabinet appointments, congressional leadership, and key policy votes. These all play a huge role in shaping the economy, and right now it's all a waiting game. To make things more complicated, there's also the fiscal 2025 budget to deal with. The government has to figure out funding by December 20th, 2024 to avoid a shutdown. Until that's settled, markets will probably stay a bit unpredictable. So while there's a lot of optimism, there's also some uncertainty in the air. Here's the million-dollar question. What should you do in the meantime? 1. Diversify your portfolio. Spread your money around. Don't put all your eggs in one basket, especially when policy changes are still up in the air. 2. Think long-term. Markets might bounce around in the short term, but remember, investing is a marathon, not a sprint. 3. Pay attention to policies. Keep an eye on announcements around taxes, infrastructure projects, and trade policies. These could create some big opportunities. 4. Spot growth sectors. Industries like energy and infrastructure might benefit if Trump focuses on deregulation and development. Look for opportunities there. Right now, it's all about being patient and staying informed. The market is riding on anticipation, but the real impact of Trump's policies will take time to unfold. Stay proactive, stay diversified, and don't let the headlines distract you from your financial goals. Let's talk crypto. Boom or bust under Trump. Trump's election has sent shockwaves through the cryptocurrency world, and it's looking bullish. Bitcoin recently smashed past the $100,000 milestone for the first time, hitting an all-time high of nearly $104,000 just a few days ago. The momentum is undeniable, and the crypto market is buzzing with excitement. Why the excitement? For starters, Trump is poised to be the most crypto-friendly president the U.S. has ever seen. He's already launched a crypto platform called World Liberty Financial, designed to encourage the use of digital coins. That alone is enough to make crypto enthusiasts sit up and take notice. Combine that with the recent introduction of spot Bitcoin ETFs and Bitcoin ETF options, and it's clear the crypto market is entering a new era of mainstream adoption. But it's not all sunshine and rainbows. While individual investors are jumping in, many financial advisors remain skeptical. A survey by Cerulli Associates found that only 2.6% of advisors actively recommend crypto to clients, with the majority, about 58.9%, saying they don't see it ever becoming a part of their client portfolios. Why? Volatility, uncertainty around regulation, and concerns about its suitability for the average investor. Still, investors aren't waiting for advisors to catch up. Nearly 90% of financial planners report fielding questions about crypto from curious clients. For those dipping their toes into this space, certified financial planners recommend starting small. Think of crypto as an alternative investment and cap your portfolio allocation at 1 to 5%. This way, you can test the waters without overexposing yourself to its infamous volatility. Here's a quick tip. Exchange-traded funds, or ETFs, are a safer way to start. They eliminate the risks of losing access to your investments, like losing your private keys, or falling victim to scams, which are still common in the crypto world. Trump's leadership could also accelerate regulatory clarity, which has been a sticking point for both retail and institutional investors. His administration seems more open to fostering innovation in this space, but the approach may still evolve. So what does this mean for you? 1. Start small. Don't go all in. A 1 to 5% allocation can still deliver significant gains in a bullish market. 2. Diversify. Even in crypto, don't put all your eggs in one basket. Explore established coins like Bitcoin and Ethereum, but keep an eye on emerging projects with strong fundamentals. 3. Stay educated. Keep up with regulatory updates and Trump's crypto policies. New developments could impact the market overnight. 4. Be patient. Crypto remains highly volatile. Don't invest money you might need for near-term expenses. Whether you're a seasoned investor or just starting out, Trump's crypto push could mark a turning point for digital assets. The key is to stay informed, stay cautious, and take advantage of the opportunities without letting the hype cloud your judgment. Crypto is risky, but with the right strategy, it could also be your next big win. Other sectors. What Trump's return means for your wallet. Trump's return to the White House isn't just about stocks and crypto. His policies could have ripple effects across several key industries. Let's break it down. Energy sector, a boost for oil and gas. Trump's stance on deregulation is expected to benefit the oil and gas industry. During his first term, his administration rolled back numerous environmental regulations, giving fossil fuel companies room to expand. Now, with his focus on American energy independence, we're likely to see increased domestic drilling, which could lower energy costs for consumers in the short term. However, this push could also come at the expense of renewable energy initiatives, potentially slowing the transition to greener alternatives. What does this mean for you? If you're an investor, energy stocks, particularly in oil and gas, might see a significant boost. But keep an eye on renewable energy companies, as any decline in government support could lead to volatility in that sector. Infrastructure, a potential boom. Infrastructure is another area where Trump is likely to make waves. His previous promises of a $1 trillion infrastructure plan didn't fully materialize, but experts predict this time could be different. Trump has already signaled his intent to rebuild America's aging roads, bridges, and airports, and this could mean massive investments in construction, steel, and related industries. For investors, this could be an opportunity. Companies in construction, materials, and heavy machinery could see their stock prices rise. And for workers, new infrastructure projects might mean more jobs in these industries. Technology, a mixed bag. The tech sector might face a more complicated relationship with Trump. While he has historically supported deregulation, his administration also had a tense relationship with big tech, including fights over antitrust regulations and content moderation policies. Smaller tech companies and startups, however, might benefit from a more hands-off approach if Trump prioritizes cutting red tape. If you're in the market for tech stocks, focus on companies that are innovating in fields like artificial intelligence and cybersecurity. These are likely to see continued growth regardless of policy shifts. Healthcare, uncertainty ahead. Healthcare is one sector that could experience significant upheaval. Trump has made it clear that he wants to reform the Affordable Care Act, which could impact insurance markets and access to care. While pharmaceutical companies might benefit from deregulation, hospitals and insurers could face challenges depending on how policies unfold. If you're worried about rising healthcare costs, it might be a good time to review your insurance options and look into health savings accounts, or HSAs, to mitigate potential increases. Housing and real estate. Rising interest? Trump's approach to the Federal Reserve could have implications for mortgage rates. If his policies lead to inflationary pressure, interest rates could rise, making it more expensive to buy a home. However, Trump's pro-business stance might also include incentives for home builders, which could increase housing supply and stabilize prices. For potential home buyers, this means acting sooner rather than later might save you money on borrowing costs. Your takeaways? 1. Watch energy stocks. Oil and gas might surge, but keep an eye on renewable energy for long-term growth. 2. Consider infrastructure investments. Companies involved in construction and materials could see major gains. 3. Be cautious with big tech. Smaller, innovative tech companies might be safer bets during a Trump administration. 4. Plan for healthcare changes. Stay informed and be proactive about managing your healthcare costs. Trump's policies are likely to have wide-ranging effects across multiple sectors, and the key to navigating them is staying informed. By paying attention to these industries and adjusting your investments and financial plans accordingly, you'll be better positioned to make the most of the changes ahead. And there you have it. Trump's inauguration could bring significant changes to stocks, crypto, and various sectors that impact your finances. Whether you're an investor or just planning your next financial move, staying informed will be key in the months ahead. If you found this video helpful, don't forget to hit that like button, share your thoughts in the comments, and subscribe for more updates on how the latest developments affect your money. See you in the next one.